Almost 6 decades in the markets. We're going to talk about SASINI. And I'll be having a conversation with Martin, the MD, to understand how is the company doing, how are they faring on, what is it for you as an investor. Martin, welcome to the show.
Thank you, and thank you so much for having me.
Excellent. Yeah. It's been some time since we talked, but a lot has happened. And I wanted to start the conversation with some of the positives that I've seen you report, especially when I looked at your profitability. And you talked about your revenue performance by March 31st, 2024. You spoke about revenues increasing from 2.5 billion to 2.9 billion, which is quite impressive. But would you care to give us just a context of this?
Yeah, thank you. And once again, I know we talk a lot around numbers every time we meet. The results you're mentioning and referring to for our first 6 months ending end of March this year. So it's a bit off from a memory perspective because we moved on. We're about to close our year. But yes, we did have an increase in revenue in comparative seasons compared to the previous year of almost $500 million shillings, and that's driven mainly by incremental sales we had in the tea business, because the other businesses, as you'll have seen in the results, are taking a bit of a beating because of issues we can talk about. But the tea business continued in those first 6 months being very active. This is a product that we produce on a daily basis, and so we sell every week, as opposed to our other products that are seasonal. And so that's the key issue.
All right. Driver, Thank you so much for that. But you also have issued a profit warning. I think you spoke about 25% anticipated decline in the earnings. I wanted to understand what has led to this.
So first of all, let's address, I see a lot of people get surprised when companies issue profit warnings. Profit warnings are simple things. They're straightforward warnings to the public that you're going to generate less profit than you did last year. And the reason that happens is the moment you do know for a fact that your profit is going to be at least 25% less than what you generated the previous year, it's in your interest as an organization and that of your shareholders that you let them know. And so when you see those from any organization, they're not a sign of anything. Is just a sign of performance being weaker than expected, and in fact being weaker than the previous year. In our case, we can see from the way the business is going now, we run October to September fiscal, and so at the end of September, which is next month, we'll close our year, and we have seen from the way we operated in the first 10 months of the year that we're not going to generate the same level of profit we generated last year, and in fact we're going to be less by in excess of 25%. And so it's in the interest of the company and the shareholders, and in fact by regulations, by our regulators, to let the public know, being a PLC. And there are several reasons, if you want to delve into why that interest has decreased. But that's basically what the profit warning is about. It just says that, yes, we're going to generate, but we're going to generate less than we did last year.
Let's talk about the mixed reactions or results, especially when we look at your gross profit margins. So despite the increase in revenue, the gross margin has shown a mixed performance. Factors contributing to this?
There are many things. If you look at the revenue line and how that flows down to the gross profit line, and in fact to the profit line at the bottom, the key belly factor in there are expenses. And when you start the year, of course, you budget, and so you have a roadmap of how you want to do things. And then you start working on that road, and sometimes the road is exactly what you thought it was going to be. Other times the road turns out to be different because of especially macroeconomic issues that you didn't see, and that now affect you from a cost perspective. We've had several issues this year, the year that we are talking about. So first of all, just by way of memory, we are not only the biggest agricultural business in East Africa, but we're also one of the most diversified. So we are involved in the growing, processing, manufacturing, packing, marketing, and exporting of tea, coffee, avocado, and macadamia. To markets as far as Japan and South Korea in the east, and the US and Canada in the west, and pretty much everything in between, depending on which crop you're talking about. So our tea mainly goes to Pakistan and the UK. It's about 80% of our tea is absorbed into those two markets. Our coffee is mainly sold to the US and Central Europe as well. our macadamia is principally sold to the US market.
Okay.
And then our avocado is principally sold in Central Europe. And so when you look at those 4 crops and what we've gone through this year, they each have faced extenuating issues with regards to difficulties with getting products to the market.
Yeah.
But there are also difficulties on the production side with increases in cost of production beyond levels where we had planned. And so that starts to squeeze the planned expenses you had, and so that also really affects your gross profit.
Okay, and thank you so much for the array that you've given us. But addressing one of the things that you've spoken about, you've touched on the logistical challenges that you've been seeing. How is this happening? Because I know you're not alone. Business, especially that has all this kind of logistics moving to places where we're hearing about the war-torn areas, is being affected. How has this hit you?
Yeah, I mean, the world has been in such a difficult place since COVID, to be honest. So just when we were recovering out of the COVID debacle several years back, you had the Russia-Ukraine war, which affected supply of fertilizer, affected supply of global finance in Forex, and many other things as well. And just as we were getting used to that, and that's still going on, you now have the Middle East issue geopolitically that has resulted in the closure of the Suez Canal. That is critical because that's the main route for Africa to get into the northern hemisphere, especially on the east coast of the African continent. And so all our products that go into Europe go through the Suez Canal. So what happens is you load products onto the port of Mombasa. Depending on the kind of ships we have in Mombasa, they go and transship in the Middle East, usually in Oman, to get into bigger ships, and that flows through the Suez Canal into Europe. So when the Middle East war sort of like started, the Suez Canal was closed for obvious reasons. Security, and the shipping lines couldn't guarantee us that our goods would get there safely. And so what's happening is you're getting goods out of Mombasa, going to Oman for transshipment, coming back all the way past Mombasa, through Durban, Cape Town, going on to the west side of the continent, into the Mediterranean Sea, and then eventually into Europe. If you have a perishable product like avocado, that affects you greatly. And in fact, that has been a big issue for us in our fruit business. It takes us about 28 days when the canal is open to move fruit from farm to shelf in Europe. Today it's taking 60 days. And so you can see the challenges, and not just SASINI, but all the fruit growers in Kenya are facing, having to do that round trip around the continent. And it's really, really affecting business to the point where everybody who's exported fruit this year is facing some serious challenges from a loss perspective with regard to quality of the fruit arriving in Europe, especially in ports like Felixstowe in the UK, where it takes an extra 10 days. Going to Rotterdam is slightly better, it's about 40 days. But because of complexities of how shipments and logistics work, the UK is less accessible, Spain is less accessible, and so it takes you an extra 10 days. So talk about 58 to 60 days to get fruit from farm to shelf. You're really, really, really on the borderline. And so one has to be so careful with what they're exporting.
What about Pakistan, that consumes a lot of your tea, and yet it's placed where exactly you're trying to avoid the routes?
Yeah, first of all, tea has no such issues because it's not perishable. It's got a 3-year shelf life. And so even if it took a month longer, you're sort of like safer, if I could use that word. And Pakistan, honestly, you know, it's a direct route, so you don't really have to go through the canal. I think the canal really affects markets in Europe, access to markets in Europe. Anything further from the canal has really been free, and we thank God for that. Touch wood, it stays that way.
So that definitely has a hit on your operating costs, I think, and I wanted you to probably highlight on that, just on the operating cost and financing costs, which has significantly then hit your books a bit higher.
The one thing to consider is, if you, and it's just basic logic really, if you talk to our shipping lines and give them 20 containers of avocado to move today, it takes 58 days to the UK. 8 months ago, it took 28 days. So, first of all, there's the effect of that time lag in the quality of the produce. But more importantly, there's the effect of the cost of that. So it doesn't cost the same to go through the Suez Canal as it costs to go through around the African continent. And so we are seeing increases of up to 2.5 times in container cost, for example, going to Europe. And whereas you can pass some of that to consumers and to your clients, you have to absorb some of that yourself, because if you pass all of it, it's just not feasible as a business. And so we are faced with the possibility of thinking about how many containers do we send? When do we send these? Do we even send them?
Yeah.
And if you don't, what do you do with the fruit and the produce? And so it's a very difficult issue. I think the Kenyan avocado and fruit market would benefit greatly from expanding where it takes its fruit, so that we reduce our reliance on Europe. Almost 100% of our Hass avocados goes to Europe. So to Germany, Holland, France, the UK, and a bit of Spain.
Okay.
And those markets are big for Kenya, and rightfully so, because they are good paying markets. But problems like this tell you that all our eggs are in one basket, and when something happens to that basket, we suffer. And this year, we are really suffering.
All shall be well, because my next question is actually your midterm recovery. You were quite optimistic about 2025 and looking forward to recovery. What are the parameters?
So if you read our warning last week, it talks to that exact point. So the reason we are letting the public know that we'll be softer in our performance than last year is one, because we know we'll be softer, so there's no need to keep quiet with it. And two, is also to give an update of where our business is, especially to our shareholders. And before we talk about the recovery, it's important to understand why that result is going to be softer. So there are 4 key crops that we trade in. So I'll handle each of them if you don't mind. Tea
go ahead.
has suffered from 2 huge issues that has faced the tea industry this year. One is there's an oversupply of tea arising from previous accumulation of stock of unsold teas from the last 3 years that have come from various players in the industry not being able to offload the tea at the prices they wanted and holding on to that tea. And because it has a shelf life, it's getting to a point where the quality of that tea that is being held is now being compromised, and so they've had to release it to try and at least get a home for it. When you have more tea than the market needs, that affects pricing, and price collapses. Number 2 is we've had a very good rainy season this year, if you think about earlier on. And so the element of fresh teas coming into the market from fresh production is also high. I think Kenya will end up in excess of 650 million kilos of black tea this year, which is almost 100 million more than what we normally sell. So if you think about the auction, which is the main channel for tea in Kenya, we, on a good normal week, would trade about 9 to 12 million kilos of black tea a week. We are trading 20 to 22 million kilos, offering 20 to 22 million kilos as an industry. So that excess tea is really putting a lot of pressure on price. And so a lot of the tea players in the industry are selling tea below their cost of production, which means losses. And in agriculture, people say that's okay, you have a few good years and you have 1 DP, and you have, in our view, it's not okay, and we need to find ways to deal with this production and accumulation of teas so that we offer what the world needs at prices that are commensurate with the business needs that we do have as Kenyan businesses, being the biggest exporter of black tea. So that's tea. On coffee, if you recall earlier on this year, the government initiated a series of regulatory changes in the industry to try and just clean up things and make sure that licensing was fair to all the players in the value chains, and that caused a bit of disruption before it settled down. It eventually has settled down, and it affected us directly because we had to give up a couple of the licenses that we were operating with before. And so we've now sort of like focused on the licenses that we can have, and that also means less revenue because the licenses that you've given up came with revenue and profit. And so if you let those businesses go, then that affects you negatively as well.
I'm sorry to just cut you short on that, just because I wanted to dig deep on that policy effects that are there. You're saying you had to give out some of the licenses for you to reapply again, or what was the condition?
So it's a fairly complex process. If you look at the coffee value chain, there are certain players that are involved in every aspect of that value chain. So the growing aspect, the processing aspect, which is milling, then the marketing aspect, and the export and the trading aspect. And I think the government felt that that's unfair if you have licenses in multiple segments of the value chain. And we were one of those. And so they said you need to choose which part of the value chain you want to play in. And so if you've run your business for 70 years being part of the whole value chain, now you have to choose one. You're giving up these other parts of the value chain that was generating revenue and profit for you. But But we support this, one, because we're a public company, and two, we need to support the government's view of the way it sees that the industry should be cleaned up. I think that the disruptions were sudden, and so a lot of the key big players from a milling perspective lost that milling capital and milling revenue as well. But there are other aspects of the value chain to play in, and so finding our feet and settling took some time, and that also affected results, because you had planned at the start of the year to have your normal licenses, and then you can only have one when the year starts. It means that you're going to have losses or less revenue and profit generated from the ones you don't have.
Absolutely. So we've talked about coffee, we've talked about tea. There were two more that you wanted to mention?
So macadamia is the third one. Macadamia is a big driver of our profit line. And the world is just really coming out of what has been, in my view, 18 to 24 months of recession, especially in the Western world, and specifically in the US market, which absorbs 90% of our macadamia nuts. And so what happened late last year, or sort of like the second half of last year, was because of that recession in the US, the consumers in that market started being discerning around what they were spending their money on. And so they reduced expenditure on luxury goods, so things they didn't need. And nuts and all other snacking segment products were affected by that. And so there was a general slump in consumption of nuts, not just macadamia nuts, but general nuts in the US. And the US is the biggest buyer of macadamia nuts at the moment. And so when that happened, it meant that it affected us as a supplier of nuts to the US. And so prices also collapsed to below cost of production. And then we made the choice to not really go full blown with production this year. That too has had a very negative effect on our results. And then lastly, I talked about avocado and the challenges we've had in the Suez Canal, which means less containers sent there, and some of the containers we've sent there have landed with quality issues. So instead of making money, you get claims which then sort of like erode your profits. It's just been a difficult year all around.
Well, at least the beauty of it is that there is always light at the end of the tunnel. And as we come to a close of the conversation, I wanted you to address two things. One, you're quite big, especially in the circles of sustainability, and we have to appreciate your the chair of the Global Compact. And I wanted to understand from your perspective as well, how are you assisting SASINI? Because you also released your report, and I hope there's another one coming soon as well. How is sustainability initiatives being affected by these current challenges that we're talking about, and what are you doing to ensure the initiatives remain a priority?
I think luckily for us, sustainability is part of our strategy, and it's part of our operating model. And so we commit to it not to drive the agenda of being seen to be sustainable, but to actually be sustainable. And so it's based on the platforms of the sustainability arena around the Sustainable Development Goals. As you know, we work with 9 of the 17 goals, and we've done that since 2019, and are delivering on them quite well, to the point where we feel that every report we release is showing that progress. I think we released the last report around early May or thereabout, covering the last year. And so if you look at our operations, they are really benchmarked on that, and the strategies are pretty clear. We have 6 pillars that drive our business. The first one, and we launched this new strategic direction in October last year. The first one is to diversify. So yes, we have these 4 crops, but what else can we do?
In fact, I wanted to ask you that, is there more coming?
And there is quite a bit of work that is happening in that general diversification bucket around looking at other crops on the mantra of large scale and export. And those are our parameters. Number 2 is to look to continue to grow our revenue line, and especially our profit line, by doing things with other companies, whether those things are joint ventures, mergers or acquisitions, or alliances that we then have with other organizations that are like-minded, that can generate profit for us. Number 3, which is central to our whole strategy, is basing our business on the Sustainable Development Platform and ESG as a mantra. And so everything we do, we've been here 72 years, we want to be here for another 72 times whatever infinity number we can. And the only way to do that is to make sure that whatever way you are doing your business is not harmful to human capital, to labor, to the environment, and you're doing it in a corrupt-free setup. And that's something that we are really committed to. Fourth is the idea that we drive efficiencies and cost reduction in our operations using technology and innovation. And so you'll see, especially in our tea business that is really huge, that there's a lot of innovation that drives the operations there, and that helps us to maintain costs, or in fact drive costs down, and at the same time improve our efficiencies. To find those two, where cost is going down and efficiency is going up, is very difficult. Number 5 is we're also looking to expand into the region. So at the moment, all those 4 crops are grown in Kenya, and we are seeing opportunities to expand that growing of crops and sourcing of our crops into other East African markets, and in fact in the continent as well. And that's something that we are pursuing aggressively. And then lastly is focus on our talent, the people who help us to achieve these results. So at the basis of all those things is how sustainable this business is from the way it's being run on the ESG platform.
Okay. So Martin, you're marking close, actually 60 years in the boss. And it's been a journey, being one of the oldest companies of the boss.
Yeah, that's something we're very proud of. Yeah,
yes,
thank you.
You're proud of that, right? So any highlights, especially for companies that will still be saying, we are thinking about going there?
Wow, that's a deep question, because we've been there for 60 years and it's difficult to put all those highlights in sort of like one answer.
Absolutely.
I think if my memory serves me right, not that I was there then, but the company is 2 years older than the Securities Exchange.
Yes.
And so our listing came 13 odd years after we were formed. And we've stayed on the Securities Exchange since then. And for several reasons. People ask us, you're such a heavily private business in the way you run, and you're below the radar, because we're an export business and we're a B2B as well. So you don't see us in the faces of consumers. So what are the benefits of being listed? First of all, for me personally, I think it really benefits us from a regulation perspective. We have several regulators across all these crops that we grow. A lot of them are linked to the NSE in terms of alignment with what the NSE does. Number 2, there's no bigger marketing you can have as a Kenyan company, or any company in any part of the world, than being listed. Because what you're saying is that you're exposing your business and the way you run it to the public. And you're also exposing your ownership to that public. And so there's no bigger accountability partner than the public. And for us, we're very proud to have been there all these years uninterrupted. We've never left and come back, and so it's something to be proud of. And there are many companies out there that are thinking about whether they should list or not. People list for different reasons, mainly to raise funds from that public in terms of selling shares and doing initial public offers and those kind of things. Others list for the publicity that comes and the strength of being a listed company, because what you're saying is you're exposing yourself to whoever is out there to litigate against you from a regulation perspective if you do something wrong. So you're not hiding behind being private. And there's nothing bigger. You're saying to your market, we are open. To the way we run our business is clean and above board. We don't generally list because of looking for funds, because we tend to generate our own funds to do our own projects, including our capex items. But that's a benefit. If we ever wanted to do a big thing, or like a big acquisition, we could go to the public and raise funds. But the biggest benefit is from this regulation, and being part of, I think it's 69 or 70 or thereabout companies that are listed in Kenya. Being one of them is big for us. It really is big. It says a lot. It helps to market the country. It helps to market the economic situation in the country. It helps to market the Securities Exchange and the way that is run in this country. And SASINI being part of that as a global business is really key.
So the last question for me is a two-part. First of all, you will give a word to the shareholders at the end of it all. But also, how do you plan to address the dividend payout? Of course, balancing shareholder expectations versus really retaining capital for your operations.
It's difficult for me to project what we're going to do with dividends. First of all, one, because we don't know, and two, it will be preemptive. And so those usually wait for the results to be finalized and announced, and then the board will make a decision on how to deal with the issue of whether we pay dividends or not. We pay dividends since I've been here, consistently every year. And our intention is to try and do that going forward. Obviously, when you have years that are very difficult, where all your crops and business lines are down the way they are this year, you've got to make a call. But we have a dividends policy that drives that. So that's the least of my worries. I think the key thing to the shareholders would be that what we see in the midterm horizon, so I'm saying 2 quarters from now, is very positive. Is the return of the macadamia market, the demand is slightly better.
Yeah.
We are seeing better prices from the US.
Okay.
The crop that we are seeing in the field is also better in terms of yield and production, and so we think that business will rebound very strongly. Avocado is going to be positively affected when our orchards come into production, into full production in the next year. That gives us better control because the fruit is wholly ours. Currently we have a mix of our fruit and outgrower fruit.
Okay.
And with farmer fruit, sometimes you can't control when they pick and sell the fruit, and so sometimes they don't usually wait for maturity of the fruit. That affects your supply and affects your numbers in actual sense. But when you have the bulk of the fruit coming from your own orchards, you have better control. So we feel that in 2025 will be a bigger factor in that business as well. The coffee business, we've now settled down with the licenses that the government has permitted us to operate under, and that is now steady. We have some extra capacity in milling, but we have had to give up our commercial milling business unit as a result of not pursuing that license. So we'll make a decision with what do we do with that asset, those assets that are in the milling space. And the tea business, despite the fact that the amount of tea in the market is still very high, and we see that being dealt with over several months to come. There's involvement by the Ministry of Agriculture and the government of Kenya to try and help and see what can be done with this excess tea. One, so that it doesn't expire in our hands as an industry, and two, it doesn't continue to perpetually diminish the price of tea in the market, because now I think people are getting Kenyan tea very, very cheaply. So those things are starting to turn around. Weather looks good. If our focus are anything to go by, we'll have another good year as well coming up, and so production should be good. The global markets are recovering. The recession, I think, is slowly sort of like is starting to get better, and above all, we'll have the US election behind us, and the US election is really, really critical. Depending on which of the two parties comes into power with relation to African business with the US. And so we are hoping for the best. We think we'll have a good 2025.
Wow. Martin Singh, thank you so much for your time.
Welcome.
There you have it. That's Martin, very optimistic that we still have a lot that is coming up, and positive aspects, especially for the company. Very confident on that. I want to leave you now right there with the market.